Okay. So hey there, guys. Um, Today we're going to talk about PG&E Corporation. This is a utilities company, and they specialize in utilities, which is providing electrical for California, northern part of California, and the central part of California. They're also a gas utilities company, and they provide gas in the same areas. Okay. So really quick here, let's look at some of the metrics of this company. And if we go here to the let's go to the max. Okay. So this company was founded, I'm not sure what year, 1988, or I really don't know. Further than that, 1982 it says here. Okay. So we're just gonna go back to the max. Um, so this company has been showing growth at a rate of 2.36%. Okay. As you can see here, the company has had growth here, um, and it was doing pretty good, all the way up to like about $68 high. Okay, and then let's go here, and then when it reached its peak, it started to drop. Now, one must ask himself, why did it drop, right? And the reason this company dropped was because they were in a massive accident that caused California nearly to burn down to dust. uh, this company was responsible for the fires in California from 2017, and stock just started to drop crazy, and then plus the the interest rates went up, so the company eventually went bankrupt. Okay, the company eventually went bankrupt and dropped nearly to $6 a share. Okay, and if you can go 1 year to date, okay, since from June, uh, the stock, well, see, since December, I'm sorry, the stock, and then February, the stock has been rising. Okay, and it's now currently selling at $23.41. Okay, so the stock has recuperated its momentum, and it seems to be on its way back up, right? So let's go here and look at the balance sheet really quick, and try to figure out what the company's equity is. And the equity is the what would the company be worth if the company went bankrupt, and what, your margin of safety, as far as how much would you get if the company would go bankrupt. Okay, so we're just gonna skip through the whole metrics here, and we're just gonna go straight to the bottom line from assets. Total assets is 81.51 billion, and then you have total liabilities of right here 68.6 billion, which sum a total equity right here of 12.9 billion. Okay, so this is what the company is worth, and at this point, $12.9 billion. Okay, uh, so what does this say about the company? Well, if you get these numbers and add them up, you can get the book value, and the book value for this company is currently at 24.48, and the PB ratio is of 0.96, which is not that bad. Okay, that means that the company is selling its shares at at a at a 0.96. It's selling the shares basically at one time. So basically, what the company is worth. So the company is basically not overvalued or undervalued. It's just valued at a correct price. Okay, so you're not paying too much, and you're not underpaying, which is a good thing if you ask me. Okay, because there's a lot of stocks that are overvalued, and people still buying them. Okay, so that's one good thing that I have to point out about this company. Okay, another thing we have to talk about is the cash flow statement. Okay, the cash flow statement. We use this metric to be able to see um, well, let's look at it first, and then we will talk about it. So if you look at here at the year of 2018, the net income for this company was six, and we're talking in millions, 6.837. Okay, so I think this is millions, guys. So this company had a loss of minus 686 uh 6,837,000,000. Not sure, but that's the number that we're dealing with right now. Sorry, I can't figure out that number. Um, and basically, what this means is that when you look at the cash flow sheet, okay, the cash flow is important because that's the money that we get to keep if we own the whole company. Okay, so that's why this is important, because this is the money that we get to keep. So if we own the whole company, but you know we don't own the whole company, so we own part of the company. Okay, so this is why this metric is important. So if we look at this metric here, okay, you can see we have to look at the cash flow from operating activities. Okay, this is the bottom line that we need to focus ourselves on. Okay, and what that means is that this is the money that we get from the business itself. You know how much money that the business operates. Okay, so you got four. I'm just going to say millions. Okay, so four. I think that's 4,752,000. Okay, I need to get my numbers right here, but let's say just that's 4,752,000, right? Which I think it really is. Okay, and then you get the the net change in property, plant, and equipment. So this is what the cost is. So the cash flow from this is the net cash flow that we get. Okay, from this company. 6514. Let's look at the so basically how much did the company spend in order to generate this income right here, right? So the company spent $6.5 million to generate $4.75 million. Okay, we're talking millions. So if you add these up and subtract, then you get the cash flow. You know, and the why we need the cash flow, I already explained it to you guys. The reason we need cash flow is because that's the money that we get to keep. So if we don't keep any money, then we're not making any profits, and the money is just being used to go back into the company, and nobody's making any money. Okay, so if you add these two up, you end up with minus $762 million. So minus 100, 700, 176.2 million dollars. That's not right. I'm having trouble with these numbers. 100, 700, 100,000. $762 million. So $100,762 million. There you go. So we're at a net loss, okay, of $100,762 million. Okay, can't write that number down, but we're at a loss. Okay, And if you go to the previous year and you get these same numbers right here, 5,000, I believe it's 500,977 million dollars. Okay, and then you get 500,641 million dollars, and if you add these up or subtract these up, you end up with a $336 million plus. So the company actually made profits this year, but not this year because they've lost money. Okay, so I wish they had somewhere where you can see the actual numbers. I can't punch them in. But so this year they've lost a lot of money. Okay, 100,762 million, and this year they made only 336 million, which cash flow, which is good. Okay, which was a 1.19% increase. Okay, so yeah. Okay, so now if you go back to the previous years, now this I have in my notes, you can't see, but you have a loss of $100,300 million. Okay, for this year, and then for the previous year, it's almost about the same, and then the year before that, it's almost about the same. So there has been no cash flow, but on the upside, the revenue has been going up. Okay, so guys, it takes a minute for you to really come up with these stocks. You can't do it right away. Like, you have to take your time and be real cautious of what you're getting into. Okay, because you can buy in a company that's possibly going bankrupt and you can lose all your money. Okay, these people almost lost all their money, but that was a incident that just was tragic, and people almost did lose all their money, but they didn't, and the company has been doing pretty good since the beginning of the year. Now that we shared, we seen the balance sheet of this company, we seen what the company is worth, and we seen the cash flow of this company. Okay, I hope that you guys understood a little bit of what I was saying. Now let's look at the upside of the company. Right, the company has been increasing in revenue year by year. Okay, but the only problem that I see with that is the cash flow. So you have to decide whether you want to invest in this company or not. Now let me give you an upside about this company, and then you can make your own assessment. Okay, so let's close this up with this. So basically, PG&E Corporation. Okay, let's read this together. Investors, in the last few months, the stock has dropped 74% to under $7 per share. Okay, the company filed for bankruptcy. So this is why bankrupt PG&E isn't trading at $0 if the company went bankrupt. Now this is where it gets really interesting, because this company was being aided by the government. Why? Why is this company sort of bailing out, quote unquote, this company? Well, guys, because people need light in California. So people need to live in California. So that's why the government is stepping in, and they're putting in their new executives and CEOs and helping this company out. Okay, which is a good thing. So if you look at it here, let's read this. So decision to file bankruptcy comes. Company faced billions of dollars in potential liabilities related to California wildfires in 2017 and 2018. This week, the company asked state regulators to allow a price hike that would raise California residents' average monthly electric bill by 7.2%. So basically what the company is doing to regain back its structure and being able to pay all that debt is that they're increasing the bill for the people, okay, who use the service, which is not a bad idea if you're in a situation that they are in, right? So there was energy crisis back in early 2000, and where a lot of blackouts. It was caused by the relationship between the California utilities and Enron, who was selling them power contracts. Okay, So we're not gonna read too much about this. So there you have it, guys. Okay, so this is one upside of part of the company. In 2017, it looks like the company was starting to make money, and then that happened, and then but now, so this company seems to be backed up by the government, and I think that's a pretty good thing, and that gives people, as far as margin of safety is concerned, you know what I mean. That gives people some comfort as far as investors, that this company has some sort of a backup. You know what I mean? So there you go. Make your own decision based on this stock. Am I gonna buy? I already own a few shares, not too many. I believe I own 10 of these stocks, and ever since I bought it, this stock has been going up for me. I'm up about, I don't know, 10% on my returns, or 13%. And will I buy more? Um, I honestly think I am gonna buy more just because of this information right here, and how I seen 2017 played out. I think the company was gonna start doing good. This is, I believe, a long-term investment. If you can see, the company never did bad prior to that. But there are better stocks, so you can put your money in. But this is one that I'm, I believe is pretty safe. The only bad thing that can happen to this company is if they have another fire, you know, and then what would happen then? You know what I mean? But other than that, um, that's all the information I can give to you about this stock. Um, is this a Warren Buffett type of stock? I don't think so, but you know what Warren Buffett says. I'll leave you with this quote: "Be greedy when others are fearful." Okay, um, that's all I can say on that. Uh, Later, guys. Don't forget to subscribe and like. Thank you. Bye.